If we look at, let's go over this morning. Please play the video last night, guys and gals. Please play the video last night on J Signal. We had, like I said, 6 trades yesterday that worked out off a high value and low value area. Please play that video, and that video will show you exactly what to do. Because what we try to do is we try to trade off these market profile levels. The market's very strong when it gets above HVA, and it becomes very weak when it gets below LVA. It's called weakness. This is on your own ninja charts on all markets. Now we had 6 trades in a row yesterday that worked just like this off of LV and HVA. So just make it simple for yourself. Don't make it difficult. It's weak below LVA and it's strong above HVA. So right when you break out a high value area, you get away from high value area. You look for the first retracement long to try to go long. The first retracement long. In fact, this was even a better shot at it because it did violate right here. It violated high value area right here. As long as you violate high value area, you're allowed to take the first retracement with the triangle showing an order imbalance on the first retracement. It happened at 6:50 again this morning for this big giant run up. It called the big run up, the 300 tick move it called it. J Signal called the 300 tick move up, $3,000 move in crude oil this morning. All right, per one contract. It called it right here. You violated high value area. Once you violate high value area, you're allowed to take the first retracement with J Signal along with the triangle. It called the exact low right here. Okay? This happened 6 times yesterday off high value and low value. My point is, what I want you to do is that when you predicate, crude oil is probably going to be in a trading range of $40 a barrel to $70 a barrel because it got a 50% haircut last year. So since it got a 50% haircut, and they're talking about U.S. double production already, right? So, and we're relying less on the imports from Saudi and so on. So it's going to cause oil to be very volatile, energy efficient cars, etc. I mean, the Nissan Maxima now is up to what, 38 miles per gallon? So it's crazy. We're not as dependent right now on oil as we used to be. That being said, it's going to cause a lot of different range in the market. I anticipate around a $40 barrel to $70 barrel range this year. So it's going to be very, very choppy. It's going to cause big breakouts like this in crude oil. Big hard moves move down and with news and hard moves up like this. So I want you to try to catch this inflection point right here like we did yesterday. We had 6 trades like this yesterday. I want you to try to catch this inflection point right there. Look how we broke through high value area. We get through high value area that tells you the market's very, very bullish. Try to get into that first retracement to get a really nice signal. All right? We nailed it yesterday, and here's another big move up. So this is a great way to play it. Trade these outer edges. A lot of traders don't trade like this, and that's why they get stopped out a lot. This is the accumulation phase in between market profile. The breakout phase is below my LVA, low value area, and above my HVA. If you get above these levels or below LVA, above HVA, you got yourself a possible runaway train, and you got yourself possible a falling knife. You want to short the falling knife. You want to jump on the runaway train. This is where a lot of short traders get their butt handed to them, and a lot of counter trend traders wipe their accounts out because they don't know they're breaking high value area. Look at this big run up. They don't know we're breaking through high value area. We do. We know the rhythm of the market. We know that's a breakout. We know not to take any shorts in here. No shorts at all. We're smarter than that. We're more knowledgeable than that. Look at all these retracements. All these retracements where novice traders getting stopped out. Shorts, 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 shorts. And they continue to get stopped out. So the bottom line is that we want to try to get the break retest. When you're trading J Signal, the only way to trade 3-sim on the HVA and LVA, let it break HVA, retest, get in with the J Signal with the triangle. It's the best way to do it. The reward to risk, this is a huge reward to risk, obviously. It's a 30-to-1 on this one. Obviously, we don't get those every day, but in a hot market, you're going to see a lot of hot markets like this. You have the potential of these. You know, I like a standard 4 to 6-to-1 to reward to risk, and I'm happy. Trying to get 40 to 60 ticks, trying to risk 100 to 150 bucks per one contract. I'm happy with that. Obviously, we're in a hot market because crude got a 50% haircut last year. So we're going to get hot markets like this. So be aware when you break out of HVA and you look for a retracement, get ready for a run. Get ready for, if it breaks LVA, get ready for some carnage. It's going to be like this probably the first 6 to 8 months of the year until we settle down into a trading range. We're in a new territory in $40 a barrel. So you got to be careful on not making sure you don't short above HVA and you don't buy below LVA. And I really want to make sure you understand that. Now, I talked about double arrows. Let me touch briefly on this. This does not happen a lot. I believe it will happen more this year in 2015. If I get double arrows, we know this is a buy signal right here with trend, right? Because we are trend change, retracement dots, double arrows. If you get double arrows and double triangles, okay? This happens in my room only when the market is hot. If you view this in my room and you see double arrows that pop up with double triangles and our moving averages spread, I mean we're in a hot market, big spread between the moving averages. This means there's a major buy imbalance in the market. A buy imbalance that could probably propel price up to 100 ticks, if not more, in a relatively short period. This buy imbalance brought the market up from 838 all the way to only 842. In 3 minutes is already up 60 ticks. 60 ticks or 50 ticks, I'm sorry, in 3 minutes. If you look where it brought it from there, from 49.90 to 51 a quarter. Look at that big jump. And it wasn't in a matter of 10 minutes because you had the double arrows in a hot market. If you do get into a hot market like this, make sure you scale quick and then let the runner run. We're going to see these a lot, especially if you're above HVA and LVA. Now, I do not play double arrows if I'm not outside of HVA and LVA in a hot market. I do not play double arrows if I'm flat moving averages. I will play double arrows if we get into a hot market. Okay? But let's just make sure that we know the deep retracement. I mean, we're trying to get on right here. Our goal in the 3 sim is to get on right here this morning. That's how we did it 6 times yesterday. This is how it happened again today. It's a certain rhythm of the market. Let HVA break, try to get the retracement. There's a big explosion to the upside. All right?